It's Monday, August 5th, 2024. We're looking at a very, very red day right now. Stocks selling off all since last week. We started a pretty big slide. Last night, Sunday, it started happening in Japan markets, overseas. U.S. following. Futures are down right now. Big sell-off day. Market's about to open. It's 9:27 a.m. Market opens in 2.5 minutes or so. These are the days. These are the big days of the year. These are the only days that really make a difference, if you ask me, about how opportunities exist out in the markets and what you're going to do when there's a 5% and a 10% pullback day. Do you have cash sitting? Are you ready to jump on things? Was there names you had in mind? I don't ever buy, I don't jump and chase just because it's dropping. Like Friday started sliding. I had some people I'm talking with. I say, let's give it another day. Let's see what happens, especially through a weekend. And then we have an election year. So there's always these other factors to pay attention to here. I'm just going to go back. There's nothing to do about today if you're me. I leave it. My investment time horizon is always 5 years, 10 years. Stick to the players who seem to have figured it out over the long run, Buffett and things. You're investing for your lifetime. So there's days like this that happen in my lifetime now. There's been a handful of days like 5%, 7% type down days. Circuit breakers triggering. There was a flash crash in 2010. There was the 2008, everyone knows. So there are big days where there's going to be blood in the water, blood in the streets, more people panic sell. That's I was looking at a couple names last week, so I was looking at dividends, right? Altria was 7.88% dividend for the yield based on the share price right then. Well, if they head down today, you're going to get that, and it's going to make that yield more attractive. Now, the company's still solid, but the market is pricing things in a scared fashion for the day, for the week. And, Fed and interest rates and all these things, these obviously are going to move the numbers, move the markets, and make headlines and make people take actions. In Buffett's office, if you ever watch, I think it's an HBO documentary on him, where he's going through, he's been in the same office his entire career in Omaha, Nebraska. And in there they have on the wall newspapers, old real newspapers from big days of fear in the markets, from decades all through the 1900s, the different times throughout his life, probably the 29 crash, and they got the big Wall Street Journal style headlines on there. And he leaves these in his office. This is for decades he's had these. That's to remember there's these irrational times and days and periods in markets where every day the price flashing at things, that's just what people are buying and selling it for right then. That does not change fundamentals and valuation on a company that you believed in a year ago or 6 months ago. If nothing has changed for that business, and the economy and the United States is a going concern, we expect we're going to be here, right? The business will continue. There's ups and downs in economies. So that's the type of thinking it takes on these big days. And so with that, I'm just going to get back into looking at the dividend players that I was looking at. So today I pulled up the screener that I had open last time. I was looking for 10% dividends. I played with some of these filters again here, and one that came up at this point, so it's Kohls. And Kohls came up, and Buckle retailers, right? And Big Five Sporting, Fat Brands, haven't heard of them really. That's a restaurant group, I guess. That's fine. So I'm looking at them. I've got Kohls here, KSS. They're a $2 billion company. The PE is 7.5. The forward P is under 10. The dividend is currently 10.81 for the yield. Let's look at them here. That's a $2.03 dividend per share. They're $18 a share right now. So this is an interesting one because obviously it's a big name. Kohls has been around. However, I always like to bet on the whole where things are heading, right? So technology has been one of the big areas I like to focus on always. I generally haven't liked older retailer names, even in safe retirement type things. Names like Walmart and things. These are everyone's favorite safety plays, or the Walmarts and things like that. I think people overtrade and move things around too much based on economics. Just pick good businesses. I think Walmart's, obviously a good business, but they're a low cost leader. They're only trying to sell volume at the lowest price possible. So in general, like, I'm not looking for companies that I don't think have it figured out for the next 10, 20 years. Not saying that about Walmart, although obviously Amazon has been eating their lunch in terms of regular retail and purchasing habits of those things. And they figured out online, best. So Amazon's been the better name if you look at the last 10 years of performance. I'm sure that'd be fun to look at, actually. Maybe I'll pull up like Walmart versus Amazon. But for Kohls, right? Kohls, obviously, the big anchor mall names, those have been hurt over the last few years. Now, I know people still going to go to department stores and clothing and those types of retailers. They'll probably always, in general, there'll be some version of that. Who's the winner, though? Like, is it going to be Kohls? Is it going to be, I don't know, what's JCPenney or the competitor type, brands like that? So how safe is this dividend is what I'm getting at the end of it, right? So they're paying right now. If I pull up and look at Kohls on the NASDAQ.com, you can pull up their dividend history. So they just had ex-dividend on June 12th. It paid $2. That was 50 cents for the quarter, the distribution, right? Now look at that. So they've been paying a 50 cent per quarter dividend, $2 per share a year, since March 2022. However, you can see it was in the 67 cents per quarter range, and even 70 cents right as the COVID 2020 time was starting. And then they cut their dividend, right? So that if you look back at 2020, 2021, obviously everyone was hurting. But when you cut that dividend, I'm sure the shares got even more hit. But then they raised it here. It's been at 50, so they doubled it again. Now that's big. These are big swings, How reliable are they going to keep that 50 cent per share? Is the company really sound and strong, and they have it figured out for the next 5-10 years? Like, will Kohls figure out their e-com or their place in the market in general retailing and things like that through the 2020s into 2030? 5 years of dividend payments from Kohls. How reliable are we? That's where, when I get into some of these names where I do know the name, and it's Kohls, it's a big name, it's a $2 billion company, but longevity of the business. Who's the management? I don't even know what can you do in the world right now where, in our industry, in advertising, where my wife and I have been, industry or the e-com ads and everything for the retailers has been the major players. E-com companies that didn't even exist 10 years ago are doing hundreds of millions of dollars online now in retail and clothing and things like that. And apparel is one of the biggest spending categories that people shop with. So it's a big spot for dollars. But if most purchasing has now moved online, and you've got things like the easy pay type things where people can shop and spend $200-300, and companies like Affirm and anything, like if you're checking out on somebody's Shopify or any website almost, you can maybe have an option now to split the payments up. Like these are these things that make the e-com side of things way more attractive than possibly slower traditional moving, the retailers who possibly have really just a customer base that's on the older side, the aging population side, and they won't maybe have those 20-year-olds and 30-year-olds coming into the stores like Kohls to kind of keep that revenue stream as the older generation kind of fades out from shopping where they used to. So that's what I'm looking at on dividends for that one gets close to 10%, and that's like my concerns. I'm not picking them right now. It's just that's what comes up on the screener. That's what I wanted to show you. So that's an interesting one. I definitely wouldn't buy them today on a big red day where everything's getting sold off. And today is about safety and waiting, and watch what the news, the headlines, if Powell speaks or whatever, the Fed chair and things like that are going to move all these things around. It's a volatility day. So volatility can be really exciting when you're opportunistically shopping. When you haven't been paying attention and all of a sudden you get volatility and you get things down 9%, you know, don't knee-jerk panic sell. If you haven't been planning and thinking and making like conscious efforts about what your portfolio moves should be, or making plans around what you were going to do with them, this is not the day to jump in and do that. This is the day to say like, okay, I definitely am going to take the lesson here. I'm going to look at what's going on. I'm going to start learning and listening to people talking about what to watch for here. But definitely, I like going on YouTube especially. You got to go listen to the true wiser, calmer, prevailing type of mindsets out there, like Warren Buffett. I'm sure they are going to have him on CNBC today. If not, maybe he might be busy, who knows, but he'll be on there this week. He'll be talking about these types of things. CNBC, they can't wait to get people like him to get some clips and some headlines out of him. But you're investing for your lifetime. You're not investing for a month at a time, and there's turbulence at times throughout the year, and this is just one of those days where big shakeup happens. It's bigger than normal, so everyone's eyes on the market right now, and keep your head down. As far as like, you don't want to run and gun and try and make moves that you don't understand yet, or panic sell or panic buy even, or thinking that it's not, mostly just you don't overreact. You kind of just be peaceful, and let's see what happens here this week. And you should be holding good names always in a portfolio anyways. That's what allows this kind of calm head through these times, is to know that you've been in solid companies, you've been paying attention, and if anything, you got cash and you see these and you're like, cool, fire sale. Everything's cheaper right now, and the names that you liked a couple weeks ago that you were kind of waiting on, maybe thinking between, you might get a real opportunity here. I'm talking about myself now, I guess, but like, this is the opportunity time. So I never want to buy on a big green day. If everything's up 2%, why would I want to buy on that day? I would love to buy good companies, quality assets, if they got cheaper, and I liked them before and now they're cheaper. Sounds great to me. Okay, talk to you later.